Hello, everybody. Welcome to the public policy webinar brought to you by the Precision Metal Forming Association and the National Tooling and Machining Association. As always, this webinar was developed by NTMA and PMA's One Voice team, which consists of Inside Beltway and Bracewell's Policy Resolution Group. Representing Inside Beltway, as always, today is Omar Nashishibi, and I am Paul Nathanson with PRG. This is just a one of the insights ways that we provide insights to PMA and NTMA members. PMA and NTMA members have exclusive insights and analysis on the federal policy, legislative, and regulatory developments that directly impact manufacturers. As you can see, we have a full lineup today. Omar has got 71 slides to present, and he promises he will do it in 30 minutes, right, Omar? I'll turn it over to you.
I think my promise was, Paul, we're never going to break the record of 72 slides that we did earlier in the spring. That's my commitment.
We're
We're going to
getting
always stay
close.
under.
We're
We
getting
got
close.
cool.
I know we have a lot of news today, and there was a lot of tariff developments over the past week, so I don't blame you for the 71 slides.
Yeah, thank you, Paul. There was quite a bit today, and so in some cases we might be glossing over a few here as we get ourselves to the Section 301 tariff, since we could spend our entire 35, 40 minutes together just literally talking about what the president did over the course of 48 hours last week. As always, we're going to start up on the Hill. The House Republicans did move a reconciliation resolution. That is what we call a process to give instructions to committees in the House to begin work on a reconciliation 3.0. This is the measure by which Republicans on Capitol Hill hope to advance some of their priorities in this election year that will not have Democrat support. Therefore, we call it a reconciliation. That's the process by which you go through in the Senate to avoid having to secure 60 votes and any members of the minority party. In this instance, they are going to try to move forward on this bill in the Senate potentially, although we're struggling to see how they get their 50 votes even in the Senate right now with an absence or two that's out there. So there's still some challenges for this legislation. Many of us think that if they do move this, at this point, logistically, they can't. The House is gone. The House left last Thursday, not to return until August 31st. So that means we're not going to have a further action, formal action rather, on the reconciliation until September. The White House has asked for $67 billion in additional spending for the Pentagon, plus another 10 billion or so, I believe it is, for intelligence services and activities. And so that's just a drop in the bucket for what we're hearing, as well as what's needed overall for the Iran war operations. But that is at least the process by which they're going right now. It still seems to be an uphill challenge for them to get there, but it is a process that they are under. Over on the government spending side, there is a concerted effort, and there will be legislation. Should be today is Friday the 31st. In the next few hours Eastern, we should have language from the Senate Appropriations Committee on a legislation that will extend government spending. The House moved a bill that would have moved what we call a continuing resolution. It keeps the lights on for government spending beyond September 30th when the fiscal year ends. The House moved their bill to go through December the 4th. The Senate, I'm hearing, is looking to move a bill that will go December the 4th. The Senate's looking to move a bill that will go December the 11th. So that's the process. The Senate's going to add some additional riders that the White House wants. We're hearing some Democrats are there, but don't know that leadership is, so it's still unclear if this gets done. And this would be the earliest continuing resolution that I've seen, although they'd have to reconcile some differences potentially with the House, although they'd like to just adopt what the Senate did. There's some other things that are going on. There's a Russia sanctions bill that we will touch on in our coming webinar. Is it's going to have some potential challenges in the House. It provides the president with more authorities to impose tariffs, which is causing heartburn among some, though did move initially through a procedural vote the other day in honor of former Senator Lindsey Graham. In the next stage, there's also other bills moving through on Chinese connectivity on vehicles. That's also causing some challenges coming out of committee, and we will probably report on that if it does advance further to the floor. Over onto the regulatory side, we have been mentioning this for some time now, so we will not review it. But workforce Pell Grants, we lobbied for multiple years since 2015 to get these expanded to cover short term under 600 clock hours. And we were successful in getting that done 12 months ago. That was in the One Big Beautiful Bill. So now you can use Pell Grants. These are what we call workforce Pell. They are now in effect, and you can see those being implemented now. Governors must approve the eligible workforce grant programs before the institutions can seek approval. But as of now, I think it's opened on July the 6th for them, and then the beginning of this month. And now they can start moving towards the end of the month and actually start getting some of these applications. So this is the Pell Grants are the way that the federal government for income-based provides funding for education, and in this case now for training services provided by industry recognized credentials and others. CMMC, there is a lot going on in this space to say. For those that are not as aware, and let's start with those that are on the Department of Defense, Department of War, Pentagon supply chain that are very familiar with this. Going back to 2014 or so under the Obama era, finalized, I think, is November, December of 2017 during Trump. It's the cybersecurity and maturity and the social product. What this does is it's the compliance mechanism for those that are in the defense supply chain that have to deal with cyber. This has been a program that's been going on. The NIST 800, it was the initial driving force behind this before they promulgated the DFAR rules to comply with what OMB put forward, what NIST rather put forward. So for cyber compliance, this is the main thing that everybody had to start doing. They rolled it out in multiple phases. There was CMMC 1.0 that they ended up renaming temporarily, scrapping, and then calling CMC 2.0. And that's now what we're dealing with here. In that 2.0, it had two main phases that are of concern here. The first phase was dealing with self-assessments. There was a number of different criteria that you had to go through, level 1, 2, and so on, in order to meet. And through that self-assessments, then you would have to be able to go and report to the primes and all the way up that you are in compliance through the self-assessments. What the Pentagon did on July the 13th is announce that they are suspending phase 2, which was going to be the third party certification. This does not mean they are lifting phase 1. Quite the contrary. In her message, the CIO at the Pentagon said that you are still required to comply with all phase 1 self-assessment and cybersecurity obligations that are there. The NIST 800 remains in effect. The DFARS by which you have to comply remain in effect. What the Pentagon is doing, though, is they are opening up a comment period, and we will be filing comments. They're going to be due on August the 14th. Anyone interested in providing their story or added information, please, you'll see our contact information at the end, or reach out to Jenny Stupica at NTMA and Christy Carmichano at PMA, as we're going to start drafting probably mid to late next week to start getting a draft circulated to our stakeholders working on this, each association, our members there. So keep that in mind that they're looking at sometime in September, I think it will be. They're going to look at a report that will be issued in this space, talking about next steps. But again, the phase 2 requirements that were scheduled to go into effect on November the 10th for third-party CMMC, those are suspended. Again, not eliminated, they're suspended. And for those of you that have gone through great expense to work towards phase 2, stay tuned on what might happen next with regards to task force recommendation. In large part, we say stay tuned and do not just assume that these are all gone. And some of you are much closer to this than we are. I'll just put this slide out there that came out recently. That was in one of our Bloomberg dailies that we received. And manufacturers are the top hacker target. And when you see information like this, that manufacturing has been the top target for hackers for 5 straight years. Share of incidents by industry, and manufacturing covers 27.7%. And that's the sources coming from IBM X-Force. But just to put that in perspective, the government is obviously noticing this as well, especially as there's an increased emphasis on defense industrial base expansion and trying to bring in new entrants into the supply base that also brings additional vulnerabilities from the primes all the way down. So just flagging that one. Don't spend too much time, but just a heads up on that. We will continue to monitor that and provide additional information as the task force and we get closer to anything they might release into the October and November timeframe. This is something we've been talking about for quite some time, and this is made in the USA claims enforcement. Please be careful. Again, we cannot provide any legal or counsel or other financial advice. for compliance, but we have mentioned this multiple times. They are cracking down on made in USA claims. And just because it's made in the United States, it doesn't mean that it meets the legal requirements to make that claim. And the Federal Trade Commission has sent multiple warning letters on made in USA representation on here. Here's another example of something recently that went out just after July the 4th. The FTC is warning companies over the questionable origin claims. The products included industrial machinery, measuring equipment, and e-cigarettes that were being produced. So unqualified claims, basically your material, virtually everything has to be made in the United States. So again, seek counsel, be very careful on this. The Federal Trade Commission is looking at this closely. So this is not just a definition for trade and import and customs. This is different. The marketing claims are different than government country of origin compliance. And please keep that aware of as well. Again, sorry for the blurriness on this one, but the Federal Communications Commission is focused on advanced robotics devices and connectivity. This is something that's been going on since the Biden administration in particular, where there is concern about items and whether it's vehicles or machinery that could be connected, including robots that could be either made overseas or could be hacked into. This is an area that we are going to expect to see an increased flurry of regulation here in the coming 12 months or so. On the funding side, if you'll notice now, it feels like every 2 months or so, we're showing you another batch of money coming out. And this is on the pay for performance funds awarded to expand registered apprenticeship programs, $162 million that are out there. This was announced on July the 7th. And if you'll notice, there's Florida Department of Commerce awarded $40 million in there, Career Source, Defense Industrial Base, Maritime Manufacturing, Shipbuilding, Jobs for the Future Inc. We've worked with those folks as well. So there's money continuing to flow out at the federal level, but again, you've got to work with your locals in order to make sure that's funneled down into productive areas in your community as well. Again, not as much here, but just trying to reinforce on state workforce agencies to form partnerships with eligible employers. So the way I would inverse reading this is I would work on tracking, is my state one of those that is seeking to partner with the federal government on the skills training fund that's for industry driven grants, and then being able to tap into it as well. In this particular case, they're saying at least 5 million of it has to be towards the shipbuilding industry, but it's not limited to just those as well. This is dusting off some cobwebs, something that was created quite some time ago. It's not a lot of money, but it is showing how the Small Business Administration is again continuing its focus, and they're allocating $9 million in grant funding for supply chain acceleration and logistics enablement. Again, something that we mentioned they created some time ago, and deadlines again due on August the 7th at 4 p.m. On the regulatory and HR side, if you could please pass this on to HR folks if you're not on here. These are a couple of opinion letters that were released last week, or the week before, on commute time, and this is increasingly significant with maybe a handful of employees, so it might affect a number of our shops. Where an employee splits the day between home and the office, the midday trip is a voluntary alternative to a normal commute. Wage and Hour Division said the midday trip is ordinary home to work travel and is not compensable. And so even though the results are the same, even if the travel falls inside the workday. Now, on the other side, they also look at those that are doing field service engineer using employer provided vehicle, takes pages, schedules clients before leaving at home. Receiving pages not compensable is what they're saying, but calling clients and scheduling and other engineers, that is compensable, integral, and indispensable to the job. So start looking at these two separate opinion letters. You can pick it up from the press release to know if it applies to you. And again, as always, seek counsel there. What this section is a little bit different. These are not regulations that are in effect. The government, the Friday before July 4th on the 3rd, announced that they were going to put what they put out is their agenda of regulations they intend to propose in the coming year or so. We look at this as what the government is planning to do to you and how we need to prepare and react and respond to those rules and regulations that may be coming. In that effect, here's the one of them we wanted a flag on mechanical power presses. This is something that's been going on since June of 2007, when the Biden, way back even before, let's say Bush, the second Bush administration started this process. We recall working on this on behalf of PMA back then. They really have not updated much of this since the 1970s. So now they are scheduled. The way to read these is down here. The double O's means sometime in July of 2026. Obviously, today's the last day. That has not happened, but it indicates that at some point in the near future, they intend to move forward on that one, as they do on lockout tagout. This one, they very much on their radar screen. We have met with OSHA on lockout tagout. They are targeting November of 2026. We've talked to them about routine tooling changeover. That's integral to operations and maintaining the exemptions that are there. But there are some additional areas that they are looking at updating on lockout tagout. Walking working surfaces also scheduled to be sometime this summer. And the big one, the heat injury and illness regulation. This is, we've all discussed this a number of times. It was initiated under the Biden administration, where they would create requirements when the heat index reached or exceeded 80 degrees Fahrenheit, and including forced time off and away, forced breaks rather, mandatory certain water temperatures and thresholds, and a number of other requirements that they put forward. The Trump folks have held public hearings, several weeks of which last year. We have filed multiple comments on the one-size-fits-all approach that the Biden folks took. But here's where we are now. They intend to do a supplemental notice of proposed rulemaking. That's what NPRM means, in December of this year, followed by a final action in October of 2027. Now, there's some legislation on Capitol Hill that would seek to block the action, although there's a number of industries in manufacturing in particular that would like to see the Trump administration move forward with a final rule to prevent some of the federal OSHA-aligned states from moving on their own and creating a multitude of a web of scenarios for which they have to comply. So just want to flag that out there as well. Independent contractors, that's coming up here in October for a final rule. We've already received a proposed rule just a few weeks ago, so we're hoping that it likely will be pretty close to what that's out there. On EPA, just we're not going to spend any time here, but this PM 2.5 could be significant on compliance when they look at construction. Also, with regards to reclassifications of attainment zones, this is when the ozone levels are monitored and the EPA restricts certain economic activity if the state doesn't have an appropriate plan. Waters of the U.S., that should be done here in the coming months to comply with a court ruling. Small business size standards, every 5 years, the government is required, the SBAs, to adjust what they consider a small business. There was in 2023, they adjusted automotive stamping and changed the headcount, the FTE headcount upwards. And so they allow more companies to be considered small businesses. So there's a chance that they move forward with that again. And on the positive note here, for sure, beneficial ownership on the Corporate Transparency Act, something we've been lobbying on since Congress put this in place in 2020, that would require disclosure of all of your contact information if you're a small business under 20 employees and 5 million. So they're looking to finalize and get rid of that. Some R&D expensings, IRS stuff in here for you to take a look at. For our New Mexico friends and anybody that might be advertising to someone who could purchase in New Mexico, note that there's new PFAS for intentionally added requirements that have now been added onto. And our friends in California, where I'm currently sitting, Prop 65, welding fumes have been added to the Prop 65 list for cancer. Please understand the regulatory requirements that will come out with this compliance and the notice in the postings if any of you might have a weld operation in the state in which we're in right now. Onto the trade and what everyone wanted to hear about and where we are on 301s. And Paul, feel free to jump in any time here, as we'll spend the next 20 minutes and the rest of our time just getting through some of the trade. Let's just level set for everybody so you know what they actually did, where we are. Starting in the middle, the obvious, the IEEPA tariffs, they're gone. They were ruled illegal. These are the International Emergency Economic Powers Act that on February 20th, the Supreme Court said are now null. These were the tariffs, though, that the president enjoyed because they went from 10% all the way up to sometimes 50% when you stacked them together. And there was no oversight. He could just put them in. But when they went away, he needed to pivot to the 122 tariffs, which were capped, which he left at only 10%. Those were limited in how long they could stay, which is what brought us up to last Friday morning. The 122 tariffs went into effect on February 24th, 12:01 a.m., and they expired on July 24th at midnight. So the president needs to replace them, which is what he did. He replaced them with the Section 301 forced labor tariffs. And this slide shows us what other tariffs are also already in effect. We've got the China lists 1 through 4A. Those are still there from 2018 and 19. Brazil has now a 25% tariff. You're all aware of steel, aluminum, copper. You know about the autos and the others. And then we've got pending the pharmaceuticals that took effect today, more Canada threats coming, robotics we'll talk about, we can talk about it as well. So there's a number of tariff regimes that you need to follow. And so for the last remaining few of you who did think that tariffs were just a negotiating tool for this administration in Trump Part 2, that is no, they don't. This is part of industrial policy, and that's where you need to be able to go. A
Um,
question came in. Go ahead, please.
no, go ahead, answer the question first.
Thank you. Because I literally got this question yesterday from an NTMA group that I was presenting to. Is there a good source to show what all in tariffs are by country code? CBP is foggy. Absolutely, CBP is foggy. And fortunately, there's not because of the way that some stack. So, for example, on China, you can add the two 301 actions together, but if there's a 232, you eliminate the 301. And that's the thing. There isn't a one-stop shop where you can go in anymore. You've got to create a system. And we've created charts for each associations that we've presented over time that can give you examples of what it looks like. So if you like, feel free to reach out to us or you can look at some of our past presentations. But no, there isn't, unfortunately. You just have to identify the product that is subject by HTS and then go to the different error places. So companies like Flexport and others will absolutely do it for you. Do not rely on ChatGPT. Claude is a little bit better. Cross check against both of them would be my suggestion, but don't take one AI answer as is. You've got to cross reference it. They miss a lot of the notations. And lastly, Paul, before you jump in, some of these exclusion exemptions that they added, the exemptions are limited. For example, you could have a part or an input that you make, but it's only exempted if it's being used in the aviation or pharmaceutical industries, for example. So they get to that level, and you got to get into some of it.
Yeah, and let me second that. Don't rely on AI and Claude for a couple of reasons. These tariffs and the way that they're tweaking them change by week almost sometimes, some of these, and just the AI doesn't catch up with it, and you can miss something. So definitely, for PMA and NTMA members, we have a lot of good information. Also, obviously, talk to a trade lawyer or your customs broker. I just wanted to point out on that previous slide, Omar, that these are really the main tariffs that impact folks who are listening to this call. There are many, many more tariffs in place and coming on. There's another number 201 where the president needs to decide for coming up this weekend on whether to impose tariffs on quartz countertops, which doesn't affect our members unless you're redoing your kitchen or bathroom. But there's one on lamb. So these are I wanted to emphasize that Omar put on this chart the ones that most likely will impact our members, but there is plenty more out there.
No, thank you for that because to your point, Paul, it's also going to impact within your supply chain some of these others that are out there. If you're in buildings and trades that you're supplying. So absolutely, there are dozens and dozens of tariffs that are coming. This administration told us back in November of 2024 when they got elected that they wanted to see a baseline tariff rate coming in on virtually all, especially industrial goods coming into this country, and they're achieving that. And you can see that here on this slide with the Section 301 forced labor tariffs. We'll show you the countries here in a moment that it covers, but see how quickly they went through this. It's an investigation, 60 of them, covering 86 countries because the EU is 27 nations. And then it started on March the 12th. But on July the 23rd, we all got the Wall Street Journal notice around 5:11, 5:10 Eastern on that day, on Thursday. And 7 hours later, the tariffs went into effect. And what they did is three different levels: 10%, 12.5%, and then a tier that will include your general duty rate in that as well. The president has the right to adjust the rates. Economies may move tiers. I'll show you an example of how that happened recently with India and Jordan. And it also exempts USMCA qualifying products and 232 covered goods. And that was to the questioner's point. This is where it starts getting complicated because if you have a covered product that is 232, you don't get to add on the 10% or 12.5 plus or minus the MFN that's in there. But they do stack on with China. So we've got some products coming in from China that are at 75% because they have two different trade actions that are on there. They've got the previous 301 and a current 232. So it's important, to Paul's point, to see how these things move. For example, here are the 17 economies that have been moved to the 10% tariff rate on virtually all of their goods coming in. There's about 2,400 items that are excluded, and I think we've got some slides in here that'll show you how that looks like. But I want to pause and explain what most favored nation general duty rates are, as it's critical for the next three slides, and you do not want to get caught with your supplier inadvertently applying a duty rate that should not be applied. In this case, it does. Every country in the world applies some kind of a general duty rate. In the United States, we're anywhere from 2.6 to 3.7 for most tooling, 3.9 for a lot of tooling. It can go up to 6 or 7 or 8%. That's called a general duty rate that we apply to everybody with which we don't have some kind of a trade agreement. So when you're applying these tariffs of 10% on Indonesia, United Kingdom, Mexico, Canada, India, then it's going to be 10% plus the general duty rate of MFN. And here's where Mexico comes back into play. The Mexicans negotiator last week said that they're not too worried about these 301s because 85% of their imports to the United States are exempted from the 301 action because they are USMCA compliant. So they're putting that into perspective. These are the countries, however, where they don't have to pay the MFN rate. Whatever it is, this is your top line number. If you're bringing in machinery or equipment that's not on a 232 list, or if you're competing against somebody shipping from these, you look at these 27 EU countries and Taiwan, they're topped at 10%. It's not 10% plus the general duty rate. In the case of Japan, South Korea, and Switzerland, which is not part of the EU, they are at 12.5% with all inclusive of the MFN rate. So not in addition. And lastly, on your country list, here's your most favored nation net tier of how it works. Excuse me, one more slide, we'll get to the other ones, but here's the technical part of how the language works where you all add it in. I'll oversimplify. It's just your top line. So it doesn't matter what the numbers are. It's going to be a flat 10 or 12.5%. But here's your 38 countries that are at the 12.5%. As I mentioned, India and Jordan were on this list. And then before final publication, they took steps on forced labor that apparently appeased the administration and were able to move themselves down to the 10% list. That goes right back to Paul's point. That happened without much notification or much announcement. And so you cannot just put a certain tariff rate into your ERP or into your competition and assume that's what it's going to be for the next 12 months. Absolutely not. They're moving through these. There's going to be changes. They're potentially going to be stacking them on top of the excess manufacturing capacity tariffs if those do come through as well. Giving you some of the examples of what's exempted. Obviously, this is just reinforcing steel, aluminum, copper, derivatives as well, not covered here. That means the forced labors will not apply if a 232 already applies to one of these items on this slide. Same thing, here's the technical language. It shall not apply if it's USMCA. The reason we're giving you this level of detail, some of you might use this as a baseline for importing. That heading on the left over there, that's the HTS code that is assigned to an import from, say, Canada or Mexico that should be receiving free of duty treatment. So that gets put into customs importation along with the actual HTS for the product itself. So that's why those are written there to know that it's legitimate. That's how you deal with those issues. And then they included what I consider three significant exclusions here, the exemptions that they could remove the tariffs of the 301 on raw materials if they thought the tariffs could lead to the unavailability of domestic supply. Doesn't impact you all on steel, aluminum, copper, but then also products that could cause economy-wide disruptions if they're subject to those tariffs. So they did give themselves those two outs and one more, products for which these tariffs may not be effective in obtaining the elimination of the Act's trade or policies. And that's where it kind of brings us back to what was the purpose of this. They're using the pretext of forced labor to move forward under this trade action, whereas I think most in Washington believe that the consensus is they were looking at what could they most quickly move forward with to replace those 122s that were expiring after the expiration of the tariffs under the IEPAs. And where we now stand under these 301s, there's legal challenges, and I'll bring Paul in on the next slide on the map to start talking a little bit about his thoughts on where those might go and the connection there. But they did provide a good number of exemptions in this process. There doesn't seem to be a public exemption, but you can go through here. We did not see many that were in chapter 72 to 89 that predominantly are where your products lie or the goods that you make come in. But this is that new baseline tariff that we believe. This is that industrial policy that they've been talking about, where they want to see a baseline of at least 10%. And that's where they're also considering this manufacturing excess capacity that is going to layer on. So as Paul kind of walks through some of the legal challenges there, this gives you an idea now of what we were talking about. They are trying to impose tariffs globally to replace those IEEPAs and 122s.
Yeah, so the Section 301, the tariffs that were put in place are already being challenged by a couple small businesses and small. One of them is Learning Resources, which was one of the co-plaintiffs on the IEEPA tariffs, and that case is known as Learning Resources versus Trump. I think that they have a much higher hill to climb because unlike the IEPA statute, Section 301 allows the president to impose tariffs and also has been tested in court before. And to date, the courts have sided with the executive branch. I mean, there are some question marks regarding the speed and also the issue of forced labor, whether the administration just concocted these to replace the 122 tariffs, which are also under our there's a lawsuit filed against them. I think the important thing I want to emphasize is number one. Unlike the IEPA tariffs, Washington, D.C. is not sitting around waiting to see what happens with these court cases. The assumption are that the tariffs are going to continue and expand in one form or the other. And second, I wanted to emphasize again what Omar says. This is a policy that this administration is committed to. If anybody heard Ambassador Greer lately, he was on the Daily podcast, the New York Times podcast, and some others, where he says that they are not fazed by any short-term inflationary impacts, that this is a longer term. This is going to take a while, and they knew that. We expect that the excess capacity tariffs will still be put in place at some point, and that there's going to be more to come, not less to come.
I'd
Thanks,
agree. Thanks, Paul, for that context, especially for those that are relying on courts for this one way or another. For those that are supportive of tariffs, to understand what might be the level of permanency, at least for the duration of this administration that we see that's out there. So I think that context is very helpful. And on the manufacturing excess capacity, we're hearing there's a particular focus on China and Vietnam, which also leads us to believe there's a potential for stacking that are out there. But to Paul's previous point, we've got tariffs now on Brazil of 25% on many imports that are out there. There's a number of other. This is just a snapshot of the pending 301 investigations. It's that manufacturing excess capacity one that we're watching closely. They've got the Germany one is underway. There's a lot of tariffs. This is just the beginning there. And for our friends here in North America and Canada and Mexico, let's start. We're going to talk a little bit here quickly on the latest on USMCA negotiations and where we are. But do want to introduce the last of the Paul and I don't normally do the I told you so's, but Paul, we've been mentioning 338s was an option, and people were just kind of rolling their eyes after they rolled their eyes at us on the IEPAs as well.
Yeah, and section. So we started to hear things coming from the White House when the smoke from the forest fires was crossing the border, and the president was getting angrier and angrier, and so he, within a couple days, the administration announced Section 338 tariffs, which allow the president to impose tariffs to address discrimination against the commerce of the U.S. In addition to smoke, what happened was that the several provinces in Canada, in response to U.S. actions, trade actions, and other actions, have basically taken U.S. products off their shelf, including alcohol. And the administration is angry about this now. The 50% proposed 50% tariff would be effective on August 19th. And as you could see, it covers $20 billion in Canadian shipments, which sound impressive, but it's only 5%. USMCA um, uh, uh, products are exempted from this. There are three different proclamations that we've provided to PMA members. I mean, Omar, I do expect that negotiations are happening and will happen, and that this is another pressure point for on various trade issues, including USMCA.
Yeah, no, it absolutely is. It's a pressure point, and that's what made me think here. As to the deadline coming up, it's an up to 50% tariffs that could take effect on August 19th. There's some in us lobbying trade community here that do think they might do a 30-day extension that would push them into September and buy more time for the parties, and that could help align with some of the talks with Mexico slated to go on here in DC, or there in DC, that around mid that month as well. Carney and Trump did speak on Tuesday, which is helpful. A couple of things that they did here. You'll see the three proclamations on motor vehicles, and that's because last year when the we've heard this twice now from USTR in the last few weeks, is that Canada was one of only two countries to retaliate against the United States for the reciprocal tariffs last year, the other being China. So the US is really focused on that fact. And they retaliated in a few ways. They started putting tariffs and revoking the USMCA compliant for motor vehicles. Several provinces removed alcohol, to Paul's point. And then the US also has this other dairy, but really narrow focus to cheese. So I think the three things that the US has brought up in these three proclamations are all solvable. They all have an out. So even if you put alcohol back on, it doesn't feel like the Canadians start buying it anyway, from what we're hearing around DC. But that's also why, to one clarification area, this is going to cover USMCA status goods. And the reason being is that the US has said that the Canadians did that on motor vehicles. And so therefore they are. So there's a chance this could escalate. But at least the fact that they had this call on Tuesday, we think is positive to hopefully prevent these 338s. And this is from a law from 100 years ago that has never been used before. And this shows you that the president here says that he can make some changes. So it's clearly a pressure point. Carney said in his statements this week, we've seen this act before. And also the Canadians, to their part, said that they reserve the right to retaliate if talks do not work out. And that's where we are right now. July 1st marked the 6 year anniversary of entry into force. It triggered a review. And that's the confusion in the media, among others. July 1 was not the date by which the parties were going to come to an agreement. It was the date by which they had to announce their intention. The Canadians and Mexicans have said they want another 16-year extension. The United States has not agreed to that full extension, is seeking additional updates and negotiations. USTR has been telling Capitol Hill that they expect negotiations to go through 2026 into December. They've told us that some areas of USMCA talks could go into 2027. We've also heard, this is now public, it was an odd statement. Jameson Greer, the U.S. Trade Representative, said last week that by the end of the year, they're hoping to have interim agreement options, which, if you break that down, does not mean they're going to have a final deal with the new rules of origin and everything else that we need to see done by the end of the year. So that tells you got some ways to go here. U.S. and Mexico have met 3 times as recently as last week, and then the next round will be in Washington in the first half of September. But at least there was a delegation that came to DC from Canada on Wednesday, and the call was held the other day as well. So that is some positive progress with the Canadian side. And the U.S. and Mexico are definitely in substantive discussions. Happy to answer some of those in the Q&A.
Omar, I
Please.
just wanted to mention on back on the 338 is that there will be court challenges, but again, it hasn't been tested in over 100 years. And I apologize, I did misspeak on the USMCA compliant goods are not exempted, but our attorneys just informally say that don't bank on a court challenge being successful on those.
Yeah, and taking some time. Have you seen on the 122s, if those get turned over, you're still going to be dealing with refunds here for the next 12 months or so. So on those 338s, yeah, I appreciate that in the context of where we are there. So on the USMCA talks, there is some progress. There's a lot of proposals that have been out there. On the copper side, this is now aligning itself with steel and aluminum. Keep in mind, though, you now have a copper smelt and cast reporting requirement. So, folks, this is going to add one more layer. You have to report the primary country of smelt and country of cast, and may report the secondary country of smelt and entry summary line that's there. So keep that in mind. For some of those within copper, it's a bit narrow, but it's adding and expanding and getting closer to what steel and aluminum was on there. here's some of that insulated copper wire and cable under those, and you have to report some of those countries as well, similar to the steel and aluminum traceability style. And so I would look at it as a precursor for USMCA as well. Won't spend time on this since none of you are going to do it, but it's just part of that investment tariff offset program that the Commerce Department Secretary has been really focused on. And they're extending this to the primary aluminum manufacturers to say that if you're going to invest in a plant, build, refurbish, expand a plant in the US, construction starts before when? January 20th, 2029. Then you can start bringing in some product tariff free. And so they're starting to create that program. Volume would be capped, and they'd go after you if you didn't go and meet those milestones retroactively. But it's at least a start. It doesn't address the secondary, but at least it's trying to bring some more of that primary aluminum online. And then yesterday, the Defense Production Act was announced here by the White House. It's used for critical mineral scraps. Our colleague Jennifer Reed and I were just emailing on this with Paul and our other colleague Lauren to see the interpretation of what this could mean. Our initial take, and we believe it might be up to the Commerce Department, and Defense Production Act would direct private industry to have a focus and provide government resources to focus on certain production activities in the United States, as it sounds like. In this case, they're looking at the critical minerals list, of which there are roughly 50 here in the United States, and they're looking at dealing with scrap from those critical minerals and looking at the refining and processing here and production here in the United States. And the way we're reading this is it likely and potentially could cover tungsten and cobalt. So when we look at the tungsten carbide and some of those inserts that may potentially be covered, and also aluminum scrap might also be covered under this, which could be helpful too on the secondary side, as we just mentioned from the primary. Something we're going to watch a little bit more closely and try to talk to Commerce closely on this as well. IEEPA refunds, I know we're over time here. That continues to move forward. If you haven't submitted for your phase one or phase two IEEPA refunds, suggest you do so. They're putting cash out. It's already paid and sent to the Treasury for disbursement. It was $86 billion as of the middle of this month. So just note that those monies are continuing to funnel through. There are challenges, though, however, when you're looking at your phase three. The federal government, DOJ, is insisting that anybody that's in a phase three that's already gone through liquidation, if you know what that term means, follow me for a second. They're saying you got to file a lawsuit against the government in CIT in order for have your name be listed for refund eligibility. The judge disagree, so they're still working through that. And there's going to be another settlement conference coming up on the 5th, next Tuesday or so, to move through that process. So keep watching that. This is a technical thing where now the administration is preparing itself for the legal challenges for the 122 by saying, yes, balance of payments, they do actually apply to the tariffs that we use that are likely going to be ruled illegal, and brings us to Paul some industry data on some of the things that we're looking at, and we'll get ready to wrap up here in about 2 minutes.
Yeah, here's our CAMU, Coalition of American Metal Manufacturers and Users price chart. I kind of made it a little easier by highlighting the prices here. We track hot rolled steel prices using the steel benchmarker report that comes out every couple of weeks. And as you can see, the gap is quite wide between US prices and China prices and EU. The capacity utilization rate, which is put out by the domestic steel industries, AISI, stands at 79.3%. It really hasn't changed very much, which is a constant marker that this administration watches very closely. So just to keep an eye on that. But here's the gap seems to be widening, and we publish this for PMA members and TMA members every couple of weeks. Thanks, Omar.
Thanks, Paul. Put it in context. You can look at it later. It shows you how much is really going through here. Just three countries, on average, $660 billion. Europeans, there are 27 countries. They're a third of that. So it shows you the scope of where we are in USMCA. For those of you that are interested in this, just stare at it a little bit. What this tells you is when they got rid of the IEEPA tariffs, of what our numbers are looking like right now. And then when they're adding in the 301s plus a possible 338, what they would be bringing in, and you are still going to be less revenue than what they were taking in as a result of the IEEPA tariff. So as you're trying to create that revenue hole and bring it back, these are all projections. But anyone who wants to mess around with those, you can get a better sense of what's coming in, what's coming out. China continues to gain momentum despite even the property bust that's going out there. If you look at some of the machinery production is going up, obviously, and a number of the other areas that construction value still keeps happening. Manufacturing is share of GDP. China's still on top, even with the slight decline that's out there. And again, one more China slide that you'll take a look at here. They are still in expansion mode. And this is one from our friends over at Whitfley that they put together. I think Lori Harbour in her newsletter recently put this out, and just kind of putting out some auto demand for those of you that want to take a look at United States productions and where we are as of right now on year to date versus where they're heading. Some forecasts have been a little higher, some others different, but figured we'd relay what some of our friends over there are showing as well. With that, please, as always, tune into any of our other platforms that we're on. You can hear us on our One Voice podcast as we're gearing up for election season. We'll do more and more analysis of what's going on as the primaries wrap. We've got Michigan next week and others, and so you'll be hearing from us. Again, appreciate your patience with us. We obviously went long, given all the content between the regulations and the trade and tariffs. Happy to answer any questions here or offline. You have our contact information, and as always, we encourage you to continue supporting your NTMA and your PMA that make this content. So stick around here for about another 30 seconds or so, and happy to be more helpful on any of the tariff questions or compliance that may be. All right. Not seeing any other questions coming in. As always, thank you for joining us. Our next webinar is going to be on August 28th at Friday at noon Eastern. We look forward to joining you then. Thank you all and enjoy the week.